Good morning.
Good morning, sir.
Okay. So this morning we we shall be looking at taxation of insurance business. Under the taxation of specialized business, we are going to look at taxation of insurance company. So yesterday I was reviewing the syllabus, the new syllabus and the new ICAN pack. I observed that taxation of insurance company has now been moved from the advanced taxation to taxation in the skills levels. So we have to do that. So this morning, we are going to look at how we are going to tax insurance company. So that is what we are going to look at this morning. It was just introduced to our syllabus. So it's one of the new area in the new syllabus. So insurance company, how do we tax them? So under taxation of specialized business. After the class, I've sent the updated materials. I've sent the updated material for this taxation of specialized business. So you can check the updated materials. You will see insurance. Under the taxation of specialized business, the material I sent before does not have insurance, but I've now sent the updated material now. So taxation of insurance company. How do we tax insurance company? Taxation of insurance company have been specified is covered by Section 14 of CETA 2007. So if you want to tax an insurance company, you have to look at the nature of insurance business. For insurance business, we have life insurance business and we have non-life insurance business. The basis for tax computation of life insurance business is different from that of non-life. What we are saying is, if an insurance company, if they have life business, they also have non-life business, you are going to compute the tax liability for the life separate, and you are
Am I the only one? I can't hear him again.
okay. Can you hear me?
Yes, sir.
Can you hear me now?
Okay, we can hear you now.
What we are saying is, if an insurance company has a life business section, you will compute the tax liability separate from that of a non-life business. So there are two types of insurance. It's either life insurance business or general insurance business, which is a non-life insurance business. The format for tax computation of life is different from non-life. So we have to compute the tax liability separate. We don't need to add the tax liability. You have to compute it separate. So that is what we are saying. So we will start this morning by looking at how do we compute tax liability for a life insurance business. If you want to distinguish between life insurance business and non-life, we are going to distinguish them, differentiate them in terms of premium. We should have it in mind that premium is not recognized as an income to life insurance business. Why premium is recognized as an income to non-life insurance business. When you look at claims too, claims is not recognized as an income, as an expenses to a life insurance business. Why claims is recognized as an expenses to non-life insurance business. So Finance Act 2020 made some changes to insurance business, which some of the changes are still effective up to now. One of the changes introduced by Finance Act 2020 to a life insurance business is that insurance business prior to Finance Act 2020, they can only carry loss for maximum of 4 years. But with an introduction of Finance Act 2020, insurance business can now carry loss forwards indefinitely. Insurance business can carry loss forward indefinitely. This is one of the changes made to an insurance business by Finance Act 2020. Another changes made to an insurance business by Finance Act 2020 is the area of minimum tax. Is going to be based on 0.5% of gross income. Why the minimum tax computation for a non-life insurance business is going to be based on 0.5% of gross premium. Finance Act 2020 also make a clear definition of investment income. And as stated in the Finance Act 2020, investment income of an insurance business, either life or non-life, will consist of debenture interest and interest on fixed deposits. So these are some of the changes made to an insurance business by Finance Act 2020. We will talk more about them by the time we start computation. Now, what we need to do now, let's look at the format on how we compute tax liability for a live business. How do we compute tax liability for a live business? What are the formats? First, if we want to compute a tax liability for a life insurance business, we have to start from investment income. We will start from.
Hello, sir.
Hello, can you hear me?
Yes, sir.
Hello, can you hear me?
We can hear you, sir.
So if you want to compute tax liability for a life insurance business, you will start from investment income. And the investment income will consist of debenture interest, number one. Second, interest on fixed deposits. At the end of the day, you add the two investment income together. We have, after you get investment income, you will now get your other income. What are the other income under the life business? We have management fee, commission, actuarial evaluation surplus, rental income, any other income, any miscellaneous income. They are other income to a life insurance business. At the end of the day, you will add investment income plus other income together so that you can get what is called gross income. You will add investment income plus other income together so that you can get what is called what? Gross income. From the gross income, you will minus allowable expenses. What are the allowable expenses? First, what you are going to minus under the allowable expenses is called general reserve. General what? Reserve. This general reserve consists of the following. How do we get the general reserve? We look at the lower of general reserve is going to be lower of either the general reserve carry forward plus life fund account carry forward. The two together, you compare it with net liability on policy. The lower between the summation of general reserve carry forward plus life fund account, when you get the sum of the two, you compare it with net liability on policy. The lower is what you are going to take as your first deduction. For the second deduction, special reserve. Special what? Reserve. Your second deduction is special reserve. In the case of special reserve, that one is talking of higher of what? 1% of gross premium. 1% of what? Gross premium, or 10% of net profit. The one that is higher between the two, either 1% of gross premium or 10% of net profit, anyone that is higher is what you are going to take as your special reserve. After you get your special reserve, the next thing you need to do, other allowable expenses. What are the other allowable expenses? Salaries and wages, repair and maintenance, printing and stationery, telephone and postage, rent, all the other allowable expenses. You put them under the deduction 3, which is called other allowable expenses. At the end of the day, you will get adjusted profits. Once you get your adjusted profits, you will now have your loss brought forward. You relieve the loss that you brought forward from your adjusted profits. Once you relieve the loss you brought forward, you will have accessible profit. Once you get your accessible profit, you can now less capital what? Allowance. You will less capital allowance from your accessible profit. You will less capital allowance. Once you less capital allowance from accessible profit, you will get what is called total profits. So that is how you are going to get the total profit for life insurance business. Once you get your total profit, you can now compute your tax liability. You can compute your company income tax. You can compute your education tax. Mind you, an insurance company also pay another type of tax, NIGTA, which is information technology tax. They pay it, provided that their turnover is more than 100 million within a year. So this is how you compute tax liability for a live business. Let's look at how we compute tax liability for a non-life business, which is general insurance business. How do we compute tax liability for a general insurance business? Like I said, under the general insurance business, premium is an income. While under the life insurance business, premium is not recognized as an income. So let's look at how we compute for non-life insurance business, which is general insurance business. We have gross premium. First, if we want to compute for non-life insurance business, we have to start from income. And the income we have, the first one is called gross premium. Gross what? Premium. From the gross premium, you less premium return on cancel policy. From your gross premium, you less premium return on what? Cancelled policy. You also less reinsurance premium from your gross premium. You will less reinsurance premium from your gross premium too. At the end of the day, if you less premium on return or cancel policy, if you less them and reinsurance premium, you will get net premium. After getting your net premium, you can now talk about investment income. And our investment income still remains the same. Debentures interest and interest on fixed deposits. From there, you get your other income. What are your other income? Management fee, commission received, rent received. One of the other income under non-life insurance business that we need to take note of, that other income is called estimated insurance claim of previous year. This is one of the other income that we need to take, we must take note of it. That one is called what? Estimated claims of what? Previous year. The estimated claims of previous year, the estimated claim of 2021 year end is going to become an income in the 2022 year end. The estimated claims of 2022 year end will become an income in 2023 year end. So you have to recognize that as part of your other income. At the end of the day, when you plus your net premium plus your other income and investment income together, you will get what is called gross income. From your gross income, you can now less some deduction, expenses. What are the expenses that you need to less from your gross income? First, provision for unexpired risk for the year. Provision for or reserve for unexpired risk for the year. You have to less that. You also need to less commissions. You also need to less insurance claim. In the case of insurance claim, the insurance claims can be actual claims or estimated claims. Insurance claim can be what? Actual claims or estimated claim. So you less that too, it's an expenses. At the end of the day, you will get adjusted profit. Once you get adjusted profit, you less your loss relief, you get accessible profit. Once you get your accessible profit, you now less your capital allowance, you get total profit. So from the total profit, you can now compute your tax liability. From your total profit, you can now compute your what? Tax liability. Once you compute your tax liability, so you get your tax. So this is how we compute tax liability for non-life insurance business. So let's try to look at some questions. Let's look at questions.
Question 6 says, below is an extraction made from the financial statement and income tax return of Premium Insurance Limited for year ended 30th June 2020 and 2021 respectively. Net profit before claim and outgoing for 2020 and 2021 to 6 million and 28 million respectively. Estimated claim and outgoing 12 million and 8.7 million respectively. Actual claim and outgoing for the year 7.5 million and then 9.2 million respectively. Required, compute the accessible profit for the relevant tax year.
Looking at this, I can
Okay.
hear you now. Yeah. What we need to do for 2020, before claims and outgoing. Net profit before claims and outgoing. Claims is an expense. When you want to solve this question, what you will do, net profit before claims and outgoing. That is the adjusted profit before claims. For 2020, you will now less the estimated claims. You will also less the actual claims. Once you less estimated claims and actual claims from the net profit before claims and outgoings, you will get accessible profit. So for 2020, the net profit before claims and outgoing is 36 million. The estimated claims and outgoing is 12 million. You less it. You also less actual claims and outgoing, 7.5 million. You less it. So at the end of the day, your accessible profit is going to be what? 16.5 million. At the end of the day, your accessible profit will be what? 16.5 million for 2020. For 2021, the net profit before claims and outgoing is 28 million. The additional income you need to add for 2021, that estimated claims and outgoing of 2020 is going to serve as what in 2021? Like I
Income.
explained earlier,
Serve as income, sir.
it will serve as income in 2021. So the net profit before claims and outgoing, 28 million plus 12 million, which is estimated claims of previous year. 28 plus 12 million. That is almost 40 million. Now, you will now less estimated claims and outgoing for 2021, 8.7 million. You also less actual claims and outgoing for 2021, 9.2 million. At the end of the day, your accessible profit for 2021 is going to be what? Is going to be 22,100,000. 22,100,000. That is your accessible profit for 2021. Do we understand? Do we understand?
Yes.
Yes, sir.
So let's look at another question. Let's look at another questions. So the other question we can look at is on life assurance business. Question 8. Question 8. So you can help us read the question 8.
Sorry, sir. The one we just solved now does not indicate whether life or non-life.
But information given to us.
Hmm.
When you talk about claims, where do we use claims? We make use of claim under non-life. We don't make use of claims in life. So the one we solve is non-life business.
Okay.
Do you understand?
Yes.
So question 8. Oh yeah.
Life Nigeria Insurance Company PLC is a life assurance company. The company provides insurance cover for life contracts Below is the extract from the financial statement for the year ended 31st December 2020. We're given the particulars and the year as 2020. Actuarial surplus, 6 million investment income, fee income, other operating income, live fund account as at 31st 12/2020, general reserve, gross premium written, profit before tax, management expenses. Please scroll up. We're also given depreciation, commission paid, NIDA levy paid, counter allowance claimed.
Okay.
Net liabilities and policies as at 31st 12/2020 was also given. Administrative expenses were also given. So required.
Okay.
Compute the tax and levy payable for the relevant year of assessment, taking into consideration the relevant amendments to the tax law. Ignore VAT. 15 marks.
This question is for which type of business?
Life.
Life. When we want to compute a life insurance business, what do we start with? We start with income, Abby. The format I gave you, you will start with income. And the income you start with is called investment income. So in this question, what are the investment income? Are we giving investment income?
Yes.
So let me use Excel. Let me use Excel to do this. Let me use Excel to do this so that we can understand. Let me use Excel. So the name of the company is Life Nigeria Insurance Company PLC. Life Nigeria Insurance Life Nigeria Insurance Company PLC. We are asked to compute tax liability. Computation of tax liability for which of the year of assessment? What is the year of assessment? What is the year of assessment?
It will be 2021. The information we were given was 2020.
So for 2021 year of assessments. For 2021 year of assessment. First, investment income. What is the investment income? How much is the investment income? How much is the investment income? I've shared the material in our group chat.
The investment income is 792,342,640.
So this is the investment income. So after investment income, according to the format, you will have other what? Other income. So what are the other income here? What are the other income?
They gave us a figure of 4,519,000.
No. A lot of things are under the other income. Look at this question very well. Any income that is not investment income will be regarded as other income.
Okay.
First, if you check the format I gave you, under the other income, you have management fee, which is fee income.
Fee
Do we
income.
have fee income here?
Yes, we have fee income.
So, fee income. So, the fee income is how much?
123,781,840. 123,781,840.
Apart from fee income, under the format I gave you, which other income do we have? We have actuarial surplus. If you look at format for life business, actuarial surplus is part of income. How much is actuarial surplus?
617,104,040.
From there, we now have other what?
Other operating income.
Other operating income. What do we have?
4,519,760. Mhm. 760, not 560.
Any other income again? Let's check round. Do we have any income again? No any income again.
No.
At the end of the day, what will be our gross income? Our gross income. Our gross income is going to be what? 1,537,748,280. Can we see that?
Yes.
So once you get your gross income, according to the format, you now less allowable deduction. You less allowable what? Deduction. What are the allowable deductions you need to less? First, you need to let what is called what? General what? General reserve. You need to less general reserve. That is the first allowable deduction you will less. Number one, general reserve. I want to less general reserve. How do I get general reserve? I said it's going to be lower of either the general reserve at the end of the year. What is general reserve at the end of the year? The general reserve carry forward. How much do we get? What is the general reserve carry in the question? We are giving now
We have
85
general reserve
million.
85086,540.
We add life fund accounts. Life fund what?
Account.
Life fund accounts. Oh yeah.
Life fund account is 590,940. 590,940,000.
The summation of the two. We compare it with what? Net liability on net liabilities on
Policy.
policy. So how much is our net liability on policy?
We have 600,740,000.
So which one is lower?
Net liabilities.
Which one is? So we take it. That is our first deduction. Our first deduction. That means our general reserve is going to be net liability on policy. Our second deduction, the second deduction is going to be what? What do we call the second deduction? Special reserves. How do we get the special reserves? Higher of what? First, 1% of gross premium. 1% of the gross premium is how much? How much is our gross premium?
1,600,000,000. 659 million 216,440.
This is our gross premium. So this is our gross premium. 1% of it times 1%. That means 1% of gross premium is 16 million. Or 10% of what? Of net profit. What is 10% of your net profit? Oh yeah. In the question, what is your net profit?
Profit before tax is given as 564,605,440.
Times 10%. Which one are you going to take, my people?
10% of profit.
That is the second deduction. Third deduction. Third. Other are liable what? Other are liable expenses. What are the other liable expenses here?
Management expenses.
Management expenses. Apart from all that, which one again?
Commission paid.
How much?
58
Commission
million.
paid.
Commission paid is 58 million. It's 6,560. That's 580,86567.
Apart from that, which one again?
Administrative expenses.
NIGDA levy too. It's an expenses under insurance. It's an
But I
expenses.
thought
NIGDA.
I thought if they pay tax, you cannot remove it from expense.
But the one of NIGDA, you can remove it under insurance. When you pay
Wow.
NIGDA, it's a liable. Even under oil and gas too. When you pay NIGDA, it's an liable deduction.
Okay, so the 1% they will pay in the previous year will be allowed in the coming year.
Following year. Yes.
Okay. For all of them.
But who?
I mean, is it for all of them, like for bank,
Yes,
for
for all of them. For all
okay.
of them.
Okay.
NIGDA is an liable deduction. Apart from that, which other one again?
Administrative expenses.
Administrative expenses. Any other expenses again?
No.
Let me add all the other expenses together. Look at the other expenses. So now, what I'm going to minus from the gross income, how much is the total expenses I'm going to minus from gross income? $600,740 plus 56,460 plus 658,572. So that means my total expenses I'm going to minus from the gross income is 1,350,000,000. My adjusted profit what will be your adjusted profits? So your adjusted profit is 221,975,250. That is your adjusted profit. Do you understand?
Yes.
From your adjusted profit, what do you minus, my people?
Loss relief on capital level.
We don't have loss relief in this question now.
Yes.
What do we minus?
Capital allowance.
How much is capital allowance?
16,592,164.
So that means my total profits. Total profits. My total profit will be 205. $383,086. From this, your total profits, you compute tax liability. What is the tax liability you need to compute? First, CIT, company income tax. What will be the rate?
30.
At 30%. That means 205,383,086. 30% of it. 30%. It's going to be 61,614,926. Anytime you compute company income tax under insurance business, you must test for what?
Minimum tax.
Minimum tax. What is our minimum tax? 0.5%
0.5% of gross
of
profit.
what?
Of gross profit.
Gross income.
Mm.
Do you understand?
Yes.
So, how much is our gross income in this question? 1,537,748,280 times 0.5%. My minimum tax is how much?
61 million.
I know. Minimum tax.
Oh, sorry, 7,688. So we have to pay the 30.
741.
Yes.
That means if the company want to pay company income tax, how much will the company pay?
61 million.
61
6149.
million. Assuming the minimum tax is greater than the actual company income tax, if the company want to pay company income tax, they will pay it based on minimum tax. Do you understand?
Yes.
Do you understand?
Yes.
Sorry, sir. Hello, sir.
I can hear you. Go ahead.
Sorry, sir. I need an explanation there. You say if the minimum tax is higher, if the company want to pay CIT, they will pay the minimum tax instead of the normal 30%.
Yes.
Okay.
Yes.
Okay.
Yes. That is the thing.
Okay.
But
Thank
in
you.
this question, the minimum tax is lower. They will pay the normal 30%. Another tax, TET. That will be at what rate? Oh yeah,
That's that should be 2.5%.
Yes.
2020.
2021 is 2%.
2%. Okay. Okay.
It's 2022 and 2023 that is 2.5. Do you understand?
Yes.
2% of your adjusted profits. Of adjusted profits. That means 2% of 221,975,250. $4,439,505. Another one, another tax that they need to pay. NICDA. NICDA levy. What is that one? That one is 1% of profit before tax. One percent of what? Profit before tax. In this question, how much is our profit before tax? 564, 605, 440. Five six four 605 440. Take money inside. No, no, no. Yeah. So 1% of profit before tax. Profit before tax is 564 605 440. One percent of it. So that means the total tax the company will pay. $71,770,485. 71,770,485. Do we have any question here? Do we have any question?
No, sir.
So this is for life business. Let's go and look at another one. Non-life business. Let's look at non-life business. Non-life business. Question 11. Question 11. Somebody can help us read it. Question 11.
Jupiter Insurance PLC is a Nigerian company which carries on a non-life insurance business. The following figure were extracted from the company financial statement for the year ended as 1st December 2023. Premium received, dividend received net, premium returned, premium paid on reinsurance, claim paid, claims recovered under reinsurance, profit on sales of fixed assets, provision for unexpected risk as at 1st January 2023, provision for unexpected risk at 31st December 2023, agency expenses, management expenses, capital allowance for the year was also given. Balancing charges on fixed assets sold was also given. You're required. Compute the income tax payable by the company for 2024 year of assessment. Question B. Under what condition is a company chargeable to a minimum tax in the year of assessment?
Okay, thank you. So, computation of tax liability for 2024 year of assessments. We start with gross premium. For the gross premium, how much is the gross premium in the question? How much do you think is the gross premium? Check the question. The gross premium is the premium received. The gross premium is the premium received, which is how much? 7 million. From the gross premium, what do we minus? What do we minus from gross premium? Premium return. We first of all minus premium return.
We can't see your Excel sheet too.
Which one are you seeing?
We are still saying the question.
Oh, can you see?
Yes.
Can you see the Excel sheet now?
Yes.
You less premium return. You also less reinsurance premium. How much is reinsurance premium? Reinsurance premium. How much is reinsurance premium?
Check your
420.
insurance payment. Yes, sir.
Can,
Check
can you
your
see that?
insurance payment. Yes, sir, for 20,000. But check your insurance premium, sir. The spelling of your insurance.
At the end of the day, my net premium is going to be 6.5. My net premium is how much? 6.5. From my net premium, we have other income. One of the other income we have in this question, one of the other income we have is called claim recover on reinsurance. Claim recover on reinsurance. Claim recovered on reinsurance. How much is the claim recover on reinsurance? How much is the claim recover on reinsurance?
410.
That means my gross income $6,910,000. From there, you less allowable what? Expenses. You less what? Allowable expenses. What are the allowable expenses you are lessing? In the question, what are the allowable expenses?
Claim paid.
Claims paid. How much is claims paid?
1.9 million.
Apart from that, provision for unexpired risk. Provision for unexpired risk. How much?
We were given opening and closing.
Closing minus opening. Closing minus opening. How much is closing?
Closing is 710,000. That's the minimum.
Minus opening.
Opening is 915,000.
915,000.
Yes. Opening is bigger than closing. So that's reduction.
Closing supposed to be bigger than opening. So that one is negative.
Yes.
Apart from that, which one next?
Agency expenses.
Agency expenses. How much?
147,000.
Which one again?
Management expenses.
How much?
775,000.
Which one again? Any other expenses? Any other
That's all.
expenses again?
No.
We come. Let's add all the expenses so that we come and less them from gross income. This is all the expenses. That means you will less them from your gross income. If you less them, you get adjusted what?
Profit.
Profits. From your adjusted profit, what do we minus or add?
Chargeable.
Add
Balancing charge. If there is
balancing charge. Do we have balancing charge in this question?
yes.
How much?
Balancing charges 27,000.
So you add them. You now less what?
Capital allowance.
How much capital allowance?
72,000.
That means my total profit will be what? $4,248,000. Abi? My tax liability. PIT at 30%. That means 30% times, when you are doing your tax liability, we have thousands. %30 times 4248.
Excuse me, sir. For this one, I will just assume 30% because we are not giving turnover or anything.
We are giving turnover. Your gross income, your gross premium, is your turnover. Your gross income. How much is your
Okay.
turnover?
Okay, that's 7 billion. Okay.
Uh-huh. Times 30%. You now test for minimum tax. You test for what? Minimum tax. Minimum tax. How do you get your minimum tax? 0.5% times gross. If it is non-life, it's called gross premium. Zero 0.5% of your gross premium. Where is your gross premium? Your gross premium is 7 million times 5%. That is 35,000. It's too small. You take the normal company income tax. You compute education tax. This one will be at what percentage?
3%.
3%. 3% of adjusted profits. Why? You can compute your NIGDA. At 1%. In this question, are we giving the net profits? Since you are not giving the net profits, you make use of adjusted profit. 1%. So the total tax the company will pay. So do we have any question regarding this?
Look, sir, please, on the question, I saw profit on sale of fixed assets. What do we do with it? I don't know.
Profit on sale of his assets.
Yes, sir, from the
Okay,
question.
who can answer I want to ask a question. Profit on sale of his assets, is it taxable income or non-taxable income?
It's non-taxable income. That is why we have balancing charge.
So are we going to use it as a part of your income?
No.
No. So profit on sale of his assets cannot be added as part of your income because it is not subjected to tax. Do you understand?
Thank you, sir.
Okay. Any other question?